Hey, good morning, everybody. It's Mike with smartoptiontrading.com. You could also catch me on Twitter at OptionsMike. So here we are on Tuesday, May 11th, and the market's showing some big divergences we've been seeing going on. And for the last week or so, we've seen tech getting ravished while the S&P 500 ran to all-time highs. So if we come back and we look at this chart, you can see here on the S&P 500, we broke out to a new all-time high here on last Friday. And we got a very vicious down candle yesterday. And we're seeing follow through pre-market here on Tuesday morning. What's going on out there is this market's getting worried about inflation. So we're starting to see divergences in the market where some sectors are very strong and others are just getting brutally sold off. If you think high growth names like TTD, like the chip makers, the semis, growth names are getting killed. And we have a very divergent market, whereas banks and names like the big box retailers, Costco and Target and Home Depot and Lowe's, all moving close to or if not at all-time highs. And along with the metals, the industrial metals, steel, copper, aluminum, all very strong in this market. And with this market saying it's very unsure, it's worried about inflation after a long run. And something to keep in mind here is when you look at this chart of the S&P 500, if you're not sure here, this is a good time to build up a cash position, have cash to buy. At some point, the names that are out of vogue today, think tech and the Qs, will come back into play tomorrow. So when you look at the SPY here, we haven't gone anywhere. And even today, while we're down, we're still right in the 21-day. We haven't broken that channel at 411. Until we break around down below that 411 area, you have to assume this market remains fairly bullish. Break that, and then you can start looking for a down move to the 50-day or lower and see where we go from there. If you move on to the next chart, the next chart here is the diamonds. And again, showing the big divergence in the market. Yesterday, the diamonds made a new all-time high. Now, while I'm not a big fan of the diamonds because it's only 30 stocks, it shows you where money's flowing in. Names that are safe from inflation. You saw names like Caterpillar making highs, Deere making highs, Honeywell, 3M, Goldman Sachs, right? These are all some of the big names that are leading this, IBM. So you can see they're piling into big cap stocks, names that can basically survive in inflation and do well. And that's why the diamonds are doing so well. So are the transports. If you look at the transports are all-time highs, names like UPS and FedEx flying. And then you go to the Qs. And the Qs tells a very different tale here. You look at the Qs, you can see we struggled to make a new all-time high in the last 3 weeks, while the SPY was making one as soon as last Friday. So we have a big divergence. The Qs closed right on the 50-day moving average here on Monday, and we are down underneath the 100-day here pre-market, signifying that we could have further weakness. Now, we did get a 10% pullback in the Qs back earlier this year, back in the March timeframe. We're down over 5% now. 10% would put us somewhere around the 307 area. And you watch that 200-day coming in there, that green line, that could be the next spot for the Qs. So something to keep in mind is that the market is not equal right now. And what's going on is they're worried about inflation. The market's basically saying to the Fed, we think inflation is going too fast and it's coming on too strong and you could lose control. And the next chart, when you look at our bonds and the bond market traders, these are some of the smartest guys out there. And the bond market, if you look what's going on here since August, has been saying that they don't want bonds, right? They've been selling bonds since August, and you can see the big plunge we had here back in the February, March timeframe. And we cannot even sustain much of a bounce. Typically in a market like this, you would be moving into some type of protection bonds. We're not seeing that here. Right now, we're seeing bonds selling off. This is making yields go up, which brings on bigger concerns of inflation. So great time to build up cash in your portfolio. Try not to chase the names that are running, like the banks, the steel names, the copper names. Let them pull back in before you get in them. And keep an eye on tech for when it finally gives that growth, that go signal.